Home equity conversion mortgage, not your grandma's reverse mortgage. Let's talk about that. Well, today I am here with Shannon from Fairway Mortgage, who has office locations pretty much
throughout the state of Georgia.
Yep. And we're going to go through what this type of mortgage is, how it's different from things that people might have heard or rumors that it's out there on the interwebs of how it's not a good mortgage when we really think it is a good tool that is underutilized. Mm-hmm. I'm going to ask him a bunch of questions. He's going to tell us some stories. We have a scenario and work through a little bit of the amortization schedule. Mm-hmm. So I'm going to get started. What is a home equity conversion mortgage?
A HECM, that it's called, or the acronym, is a reverse mortgage that is for folks that are 62 and older. And there's 3 different types of HECMs. There's a traditional, there's a refinance, and even a purchase. So a lot of folks didn't know that you could actually purchase a home with a reverse mortgage, and we'll talk about some of those benefits.
You said that this is for people who are 62 years and older. So who do you think in that age range benefits from this?
Well, there's a sliding scale of benefit if you think in those terms. As you get older, I think there's more and more benefit to the program. At age 62, you have a little bit more limited access to the equity that's in your home. I'll give you an example. It's roughly 30% of the available equity that you'd have access to for the loan. So in some cases that may or may not work out in terms of what's available or having to bring money to closing. So those are some of the dynamics of 62. For an example, at the other end of that spectrum, I had a borrower who's 104 and had over roughly 70% access to the available equity.
Wow, that's a lot. So who do you find is your typical HECM customer when they come to you?
I would say your typical borrower is someone who has an existing mortgage that is in a position where they could enjoy the benefit of no longer having a mortgage payment. And so they may or may not have an existing lien to pay off, but in many cases, not having that mortgage payment is going to have a massive impact on their affordability and their standard of living with their limited resources of being on a fixed income.
Now, I have heard that this is backed by FHA, so that means it's a government-issued loan. Can you tell us a little bit more about that?
Sure. It just means that FHA insures the loan against default. So you still have the upfront mortgage insurance premium like you would have on a forward mortgage with FHA, but it is guaranteed up until you age 150, believe it or not.
Oh, wow. So I think that's what scares people, right? Because they think, what if I outlive my reverse mortgage and default? But that's not really the case.
One of the first questions I get nearly each and every time is, what happens when I die? Never a fun conversation to have, but it's inevitable. So what happens with the reverse mortgages are exactly the same as you would find on a forward. Whatever is the remaining equity after the loan is paid off is distributed per the last will and testament and or how the title is held. So those are features of the HECM that is that defining moment.
Well, as a real estate agent, I kind of specialize in probate. So now when you say that, the heirs can either pay it off or I guess refinance it, right?
Yep.
Is there a time frame in that?
I'm glad you asked. We have a current example right now where a stepson inherited a home at the Landings over in Savannah, and the loan servicer, once they're notified that the borrower is deceased, they send out what looks like a foreclosure notice, which you can imagine would really concern anybody.
Scare somebody, yes.
But what that triggers is that you have 4 different times that you can request you're just letting the lender know that our decision is to refinance the home or to sell the property.
Okay.
And so you actually have a full year to actually have that time because, like you mentioned, probate, that sometimes doesn't happen immediately, right?
Right.
And so in many cases, it may take months to have a, clear that process.
Yes. Dealing with probate, I have seen it all, I believe. And I say that, and the time frame, if you get on it, you can get through probate pretty quickly as long as everybody's getting along.
Exactly.
It's when things are, I guess, like with any house, if you can't make that decision in that time frame, then you have the potential of losing it.
Correct.
Okay.
Yeah.
So my advice for people with probate is try to get along with your family members. The faster you can get through it, the faster you can get to the equity.
Well, and I would encourage everyone to have a last will and testament.
Yes. Yes.
That's critically important, and especially when you factor in the equity and you've got surviving heirs and all those things, I couldn't encourage that enough, is to make sure you have those conversations as best you can in advance of that inevitability.
Yes, and who's going to be that executor? Because that's key.
Yeah,
yes.
for sure.
Okay. Now, HECM, how does this compare to a conventional mortgage? Because most people are used to that conventional mortgage of not having to have escrow, or choosing to whether or not you escrow your taxes and insurance and things like that.
Sure. I mean, I think with the HECM product, we're so conditioned to think of our forward mortgages that it's a head scratcher for us many times to figure out, like, hey, how does this work again? So on a conventional, 30-year fixed vanilla bean type mortgage, you've got your principal and interest payment, your taxes and your insurance. If you've got less than 20% equity in the property, you've got, of course, mortgage insurance. And of course, the most important factor is you have a monthly mortgage payment, right? And not to, like, if you were to make an error somehow, some way, and neglect to pay your taxes or your insurance on your home, that's going to create a lien on the property, but it doesn't lead to foreclosure.
Okay.
So on a reverse mortgage, what's happened in the past, and this is how this product has gotten such a bad reputation, is before you had protections for the borrower in regards to the amount of equity they could acquire, is that sons and daughters, moms and dads would think, well, now let's go ahead and take out this equity, and we'll either give it to our heirs now while we're alive and bless them, or there's a myriad of conversations that took place, but mom or dad, sister, brother maybe forgot to pay taxes or insurance because they wasn't sure that it was included in the loan. And that's what actually is the only thing that could ever trigger default on a reverse.
Okay, so now on the current reverses, you still have to pay, you have to be on top of that.
The way that I look at it is borrowers are now protected.
Okay.
In some cases from themselves or
I
their
see,
family
because
members.
then the reverse mortgage then kicks in and will pay for those items if...
You can't get all the equity at once.
Right.
It's like pump the brakes. You can't have all of your things at one time. But like I said, for the 100-year-old borrower who has access to 70%, that created a solution for her and her family, for her to remain in her home and to have full-time health care.
So if I have liquid assets or cash to buy a house, how can one of these HECM loans still benefit me?
Well, you're going to end up purchasing the home for less than the sales price, and the best part, no mortgage payment. So I'll give you an example. There's a client that we have in Reynolds Plantation area, new construction, built a home on the golf course on the water for $900,000. Had roughly a little over $3 to $3.5 million in liquid assets, through retirement savings and so forth. We showed him the math on how this, program works, and he was able to purchase the home for a little more than $650,000 with cash, but have no payment.
So Cash is $600,000, and then the HECM loan was at that $300,000 mark.
And so he still has over $300,000 in equity in the property that will continue to grow as appreciation does, along with his reverse mortgage and that balance. And so that will continue to grow over time.
And still has his liquidity over and wherever he had that stored as well.
Correct. And so in his case, he wasn't forced to come up with another $300,000 in cash.
Right.
He could keep that in his interest-bearing accounts for the long term.
Awesome. That sounds like a wonderful solution.
Oh, absolutely. Yeah.
I love that story.
Yeah,
It's so cool. When does the HECM become due and payable?
It is due and payable. There's two different things that would create that. Of course, the first and foremost is the borrower passes away. The other that would trigger that would be if the borrower no longer lives in the property as their primary residence.
Okay, so you can't decide that you're going to go into a retirement community or choose a second home to go live in and still keep that reverse mortgage on that property.
Can't rent it out, right. Can't vacate the property.
Of course, if you wanted to hold on to that property, then you would just have to do another refinance and go from there.
Yep, you could refinance it to a forward if you like, or you could sell the property. You could have one of your heirs, inhabit the home, but just not as a reverse mortgage.
Okay. What are the tax implications when you purchase a home with a HECM?
I would defer that question to a tax preparer.
Yes, CPA.
Yeah.
So we know enough to be dangerous, right?
Yeah, sure. I mean, when I think of the tax benefits of a HECM, I think in terms of the folks that have a monthly income that comes from this program, or a refinance where they have a reverse line of credit that they can draw from. In both of those circumstances, each time you draw from equity in the property, that is tax-free income.
Because it's really considered
your
debt.
Asset.
Yeah, yeah. So you're not going to get, it's not like you're getting a payment out of some kind of interest-bearing account that's giving you a return that's taxable.
Correct. Yeah, and so in the example of we had a borrower who refinanced and paid off an existing mortgage, had no payment. We also had a way to create $5,000 a month in monthly income. That income was tax-free.
Awesome. So who owns a home while it's under a HECM?
The borrower.
The borrower, always.
Yeah,
right?
You're just, the home, just like a forward, is collateral for the loan that you have.
Okay, and what are your obligations towards a HECM?
That you must live in it as your primary residence, and that you must maintain the taxes and
Those
insurance.
taxes and insurance.
Those are the only two variables that would ever have you foreclose on a home.
Okay, and some pros and cons of a HECM to purchase a home.
There are so many pros. Each loan is a different story. Each loan is a deep dive into what's best for the borrower and for the family. And so in many cases, they never considered that a reverse mortgage would provide a solution to the dilemmas that happen inevitably as we age, whether or not we're ambulatory, whether or not we can, if we have memory loss. There's so many things, whether or not we're ideally, none of us would prefer to pass away in a nursing home. I've had borrowers ask me point blank, is this something that can help me to remain in my home until my last dying day? And we had a circumstance just like that, and the fella, unfortunately, at age 96, did pass away, but he was able to achieve his goal, which was to die in the same home that his wife did. So each one of these loan applications is so different, and it takes several calls, meetings to make sure that everyone is on the same page in terms of the benefits and the structure of the loan and the requirements for them to follow. But I have not found a con in that regard. I think most would associate a con for a reverse mortgage to the cost. And those costs are fairly expensive because it's not something the borrower pays out of pocket, but it is something that comes from the equity in the home. And so when you start adding up just the mortgage insurance premium, a lot of folks get sticker shock just looking at that, because it has a comma in it typically, right? And it looks like a very expensive loan program. All the other loan costs, just you would have like on your forward mortgage, the attorney's fees, title insurance, recording fees, all those things are the same.
Okay, so it sounds like this is a great product that if you want to age in place, and I'm going to throw a statistic out there that I hear often by being in my real estate planner community and being age in place certified, is that 80% of people want to stay in their home, and only 30% get to, because it's something that happens along the way, whether they become immobile. So this could be a solution to be able to hire outside help to help you stay in the home and continue to live in the home.
Absolutely. Got countless examples like that. None of us plan. We don't know what's going to happen.
Right.
We don't know what's going to happen with mom or dad. We pray that everything works out ideally, and often it doesn't. And like I said, most are looking at this as a viable hope for a solution. Again, because if you look at baby boomers at large, no one has experienced more growth in equity than this generation of baby boomers.
Yes.
Nobody in the history of housing. But again, the folks that are outliving their savings is a large percentage, unfortunately. And so many didn't even know that this was something that was even a viable option. So it's an interesting conversation each and every time.
Which is why they should visit with you, so they can go over the 3 different types, so that whatever their scenario is, you can best suit their needs.
Absolutely. And the application process, or if you want to look at it as for forward mortgages, what a pre-qualification process would look like, it's free, first and foremost, is when you do these proposals. But all that's needed is the age of the borrower, their date of birth, their full name, ideally the value of the property, and really that's their contact information. That's enough where I can create a proposal where we can look at it together and look at answering all those questions, which there always are many, and, which is totally fine.
So now we have a little scenario here, and it says your government-insured home equity conversion mortgage. So you want to go over this little scenario here, and we'll pop it up on the screen so everyone can see it.
Sure.
Okay.
Yeah, you have a pie chart that there's literally probably 50 pages on these proposals, and there's really 3 pages that I think help to explain the program very well. I'm very much a visual learner, like most of us. And this simple pie chart will give you an indication as to the cost of the loan, which is important, the principal limit, which we call the loan amount on the first forward mortgage, and you also have the equity reserve. So that's always going to give you an indication that the equity remains in the home for quite a long time. When you get to the amortization schedule that we'll share with you here in a moment, you'll see that with an expected appreciation of roughly 4%, as these lines of credit grow and as the loan balance grows, remember, so too does the appreciation. And so it's just a simple chart that you can look at literally like, okay, now I'm 90 and here's what this means. Now I reach 95 and here's where I stand. And so it's just a very helpful illustration on how the program works.
I see what you mean by the heart attack on the mortgage insurance premium.
Yeah. Wow.
This example being $11,520, that is a sticker shock when you're used to looking at a much smaller number on a conventional loan.
Sure.
And I could see this is how this loan is funded and protects the.
Yeah, and so the FHA is insuring the loan against borrower default. And so there is no benefit to the borrower of having mortgage insurance. You will often see, and this applies on forward mortgages as well, the moment you close, you'll be starting to get junk mail for mortgage insurance that is for life protection. That is a scam. And that, so we encourage all of our borrowers, both reverse and forward, to contact us with any questions on mail that they receive, because often, in more cases than not, it's nothing that they would ever need or want on their loan.
Yeah. Okay, now I'm going to flip it over to our amortization schedule.
Okay.
And you kind of already talked a little bit about how you can see at what age. So here it's laid out in the age-wise of, and I see the MIP rises with age, as well as you were saying you can get more equity out as you age.
Yeah, and so in this example that we'll share with you, this is a purchase. And so this one is very basic in the terms that there is no monthly income from the loan, there is no reverse line of credit, and we're not paying off an existing mortgage, so that we've improved the household budget. In this case, all we've done is we've purchased a home with a reverse, and the amortization schedule will share with you how the loan balance increases year over year based upon the percentage rate that's locked with the loan. And it will also juxtapose that with the property value increasing at an expected rate of 4%.
So in this instance, they got rid of the mortgage payment, which brings more cash flow into them wherever they're receiving their money from.
Yeah, in this example, this home on a forward mortgage with 20% down would have been a monthly payment roughly of almost $4,000.
Okay, so now they have extra $4,000 in their pocket because they're not paying the mortgage payment.
They're not spending from their retirement funds.
Right, so this is one of those 3 examples. So now if I'm in this and I want to switch to a line of credit, do I have to refinance?
Yes.
Okay.
Yeah, so in a circumstance where, I'll share one other quick story with you. We had a husband and wife. He was retiring from the Department of Motor Vehicles, having worked there for over 42 years. Had a pension of over $6,500 a month.
Okay.
Did not have survivor benefits.
Oh, wow.
And so the wife was going to have to adjust her budget down to $2,700 a month.
Oh, wow, that's pretty steep.
Massive difference. And so what we talked to them about is having a reverse line of credit. You know, he kept saying, yeah, but I own my house free and clear. Correct, that's why we're able to offer this. And so she may not need, you know, that, but it's nice to have in the event that there's a roof repair, we need new appliances, all the things as a homeowner that we need, right? And so, or to pay the taxes or on the insurance on the home. You know, how likely is it that she'd be able to do that with a $2,700 a month budget in today's economy?
Right.
Very unlikely. And so she used this actually to purchase plane tickets for her family to be able to travel to Italy and Switzerland, which she had never been out of the country before.
Oh, wow.
So it was exciting for her and her group to be able to do that, and to and of course to not have a payment on that debt.
Creating a wonderful family memory.
Yeah, absolutely. So it was a neat story.
Awesome. Well, is there anything else that I haven't asked you that you want to talk about?
I would just encourage people to ask every question that you can think of. Every one of these stories is unique and different, and it is a family decision. So we're here to meet with financial planners. I'm happy to discuss this on a call or meetings with family members. You know, we want to spend the time that you can make an informed decision for your family.
I guess elder care attorneys as well, if people are setting up wills or trusts and things like that.
For sure, yeah.
Awesome. Well, thank you for stopping by, and his contact information will be on the screen and down below in our comments. I hope you found this video helpful around reverse mortgages. Of course, reach out to KC with any questions you have, because he can help you in the entire state of Georgia as well as some surrounding states. And of course, I can help you in the greater Atlanta area if you need help with your real estate, especially if you want to do that fun thing where you put some cash down and the reverse mortgage and we go buy new construction. That would be fun. And I guess I'll see you guys next time.
Yeah, thank you for the opportunity.
All right, bye. Are you digging the kind of content I'm producing? Then be sure to watch this next video. And don't forget to subscribe to my channel. That way, you'll be in the know when I release my next video.